Welcome into my favorite series I do on this channel each and every month called 3 Stocks I'm Buying Now. This is the September 2020 edition. Happy to have you guys here. In this video here today, 2 very simple things, okay? I'm going to tell you the 3 stocks I'm buying in this upcoming month, but more importantly, I'm going to explain why I'm buying these stocks. That's always a much more important reason than what particular stocks I'm buying, because you can actually get a lot of context to why I look into these certain kind of stocks, why I'm excited about these certain kind of stocks. And anybody that's watching this who hasn't seen this series before, which most of you guys have seen this series before, I am a long-term investor in companies. I'm usually looking out for multi-years out. I'm not just somebody trying to get in these stocks, flip them, sell out tomorrow or something like that. Usually when I'm buying these stocks, I'm buying for several years of opportunity and hopefully mass growth in the stock or the dividend or whatever I'm in that stock for. So I hope you guys enjoy this. As always, if you don't mind, smash me a thumbs up. That helps out the YouTube channel in a massive way, and helps, you know, kind of spread the reach out there for the YouTube channel. And last month we hit 5,442 thumbs up on last month's video, which I think was an all-time record for thumbs up on this series. So what the heck, let's go ahead and try to set a new record here with the September 2020 edition. It's not gonna be easy, guys, but I think we might be able to do it, okay? And before we get into these 3 stocks, just want to let you know, if you're looking to scale your stock market portfolio and you're looking to understand exactly what I look for in stocks, exactly how I value companies, run portfolios, things like that, go ahead and check out the first link in the description down there. They'll allow you to fill out an application down there and hopefully get on the phone with somebody high up from my team. We can talk to you a bit about Financial Fortress, which is a product we have in the market that has helped a ton of people get to 6 figures and 7 figures plus in the stock market. So if you're looking to scale your stock market account, click that first link down there, okay? Let's get into these stocks. The first stock up here of the bunch is Dropbox, okay? Number 1 of 3 is Dropbox. Ticker symbol on this one is DBX, okay? Dropbox, if you don't know, it's a cloud and workflow company. This is a stock that's about $21 a share here today with a market capitalization under $10 billion, a market cap of about $8.75 billion to be exact. This is a stock I started buying very recently, and I plan to continue to buy the stock. I'll tell you guys exactly how much I plan to buy of the stock a little later in this video, but essentially Dropbox, I'm up to 755 shares in one of my accounts, and then in another account I own some shares. I own 1,270 shares, and that's what I have in Dropbox so far. Very new position for me and one I plan to continue to add. So if we go in and look at the company presentation they put out in August, we're going to find out a lot about this company, a lot of things, why I'm excited about this company, why I think it has a lot of growth potential in front of it, why I think this is a type of stock that I can double up or more than double up my money in future. Which, by the way, if I'm getting involved with the stock, usually I'm looking for at least a double up over the next 5 years, bare minimum, okay? So if you think about Dropbox, this is a company that, you know, historically has always been about keeping your files in sync. A cloud company, you put files, photos, videos, voice message, video messages, whatever it is, you put them in these files that can go to the cloud and that can be stored. And you can, store even terabytes of data up there, right? But now they're even moving into kind of like keeping teams in sync, which is a whole different kind of wave than the company's been on historically, and creating smart workspaces. So companies, whether you're a small business, mid-size, or like an enterprise, a large corporation, right? You have a smart workspace. Everybody can kind of seamlessly work together, interact, and it's just a whole different environment than what companies are used to. Let's just put it that way. And actually a much better way of doing things. They aren't the only ones doing this, by the way. There are many companies trying to create these smart workspaces, Microsoft being one of them, Slack being another, a few other companies, and Dropbox is trying to be one as well, because this is a big opportunity, okay? Now, when it comes to Dropbox, a company that has 600 million plus registered users, over 550 billion pieces of content have been uploaded to their cloud, okay? Over 15 million paying users as of right now, and that number is increasing, and 80% of the subscribers use Dropbox for work, which, if Dropbox can start getting intertwined more and more with workers, more and more workers sharing files and things like that, it ends up prompting the whole entire company to start using Dropbox more and more, okay? Now, in terms of myself, what is my story with Dropbox? This is a stock I just started buying very recently, but I've actually been a Dropbox customer for like 5 years now, okay? I started with Dropbox in about 2015 when I was starting out with my real estate marketing company, which is essentially I was looking for a way I could store videos, photos, things like that, and I could easily send them in a very easy manner to clients, real estate agents, brokers, whatever, whoever paid me for those jobs, and do it in a way that they understood, and it was just really like a seamless way. And so that's why I signed up for Dropbox, and I've been a customer for years ever since. And here to this day, okay, which I'm recording this on August 31st at like 5 p.m., right? Even to this day, Dropbox is one of the most important apps on the device I use more than any other, okay, which is my iPad. Like, look at that. It's right on the front page. It's something I use almost day in and day out for an enormous amount of things. We keep a lot of files on there and just a ton of things in general. For instance, I have what's called like a breadcrumbs tab, essentially in the private stock group's Discord chat, right? And like if I like record a voice message, like, you know, I might talk, you know, but why I'm going to look into the stock, why I'm going to buy the stock, things like that. Want to record a 2-4 minute voice message, I do it right through the Dropbox app. I can do it on my iPad, I can do it on my iPhone. Either way, it gets uploaded. I share the link right there. Everybody can just click on it, listen to whatever I have to say. If I want to do a video, I can post in there, anything across the board. As well as I get a ton of DMs from students and members every single day. And sometimes, you know, I don't feel like responding with a super long text back to them. Sometimes I'll just record them a voice message or a little video message. I'll upload it to Dropbox real quick, copy link. It's like done in a matter of seconds. It's amazing. The file's kept right there. It's shared so easily, and it's just amazing. And so yeah, to this day, I'm still honestly, I'm more of a loyal Dropbox user now than I've ever been in the past. My journey just started in 2015, okay? And in terms of Dropbox, they're trying to build the world's first smart workspace, which once again, this is something that a lot of companies are going after. And when a lot of big companies are going after this, you know there's something big there. We'll have to see who kind of wins this and how everything integrates and who the biggest players are here. But Dropbox is absolutely throwing their hat in the ring, and they absolutely want to be a major player here. And when you think about this, right, it's kind of almost feels like Microsoft versus everybody else, because you have so many smaller players out there fighting it out, and you have Microsoft, which is a big giant, and they're trying to be everything, and they don't really want anybody else to exist. They want to be everything. And we're going to have to see how that all works out. Is it going to be a bunch of smaller companies that could group together to fight them off, or is it going to be just trying to, you know, Microsoft trying to dominate everything? This is going to be really, really intriguing, okay? Now, the way Dropbox does things, it's just different, right? If you think about the traditional way, a lot of these companies, these enterprise companies and things like that, the way they operate, they design things for IT. And IT's folks are very smart and they can understand complicated ways of doing things, but that's not really the best way to do things in today's environment, okay? Whereas Dropbox, the way they design everything, it's designed for users, okay? That's what attracted me to Dropbox back in 2015 and why I still use this service as much, if not more than ever before when it comes to Dropbox, because it's just so dang simple, man. I want to do something, it's just like a button and it's uploaded. And boom, I can share, I can copy the link right away, share it out. It's like such cake, okay? And so just the way they do things, it's just, in my opinion, it's better than a lot of other companies do things. A lot of other companies, their user interfaces just aren't that great. And Dropbox, I think, is you know, top tier when it comes to creating user interfaces and simplicity when doing these sorts of jobs. They have an open ecosystem, which I think is a very intelligent decision. They want to work with everybody across the board. You know, some of these other companies, Microsoft, and some of these others, you know, Google, maybe even to a certain extent, a lot of them don't have that open of ecosystems. They might want to work with yours, but they're trying to be like very walled in ecosystems. Whereas a company like Dropbox, they're going to let everybody in. They want to be everybody's friend. They want to work well with everybody. And I think that's going to be, in my opinion, long term. I'm hopeful, and I think that will be a wise decision long term, rather than just being kind of a walled garden situation. And when you think about Dropbox, there's lots of growth potential, real growth potential here, okay? 15 million paying users. That sounds like a massive number. It's not really. They have 350 million potential high-value targets that are using Dropbox, but you know, more for like the free service or something like that, right? Where they're not actually paying. Never mind, there's 600 million plus registered users, and there'll be a lot more in the future, okay? So when you think about that 15 million paying user number, that number, you could definitely imagine a day when it goes to 25 million, 30 million, 40 million, 50 million in the future. So just a massive, massive growth opportunity there, okay? Now, they also acquired a company very recently called HelloSign, okay? HelloSign is a way to basically e-sign documents, which is the whole new wave, okay? The whole, you know, the days of, you know, having to sign physical paperwork in mass is going away, okay? It's been going away for the last year or two. It will continue to go away. throughout 2030, and hopefully by the end of 2030 we don't have to sign any physical paperwork regardless of where you're going. I don't care if you're going to the hospital or you're performing a real estate transaction or you're buying a car or anything across the board. Everything, in my opinion, over time is going to basically e-sign of documents, and HelloSign is one of the biggest players in there. They're the smaller player to something like a DocuSign. They're the smaller player, no doubt, but when you think about DocuSign, the big player in that market, right? They have a $40+ billion market capitalization on this company, right? $40+ billion, that is huge, enormous market cap. Think about Dropbox for a minute, right? They own a smaller competitor to DocuSign, and you're getting a beast of a cloud company for under $10 billion. And then you have DocuSign with a $40+ billion valuation. Either DocuSign's really, really overvalued, or Dropbox is really, really undervalued. It remains to be seen. But I really believe that Dropbox is very, very undervalued asset out there in the market right now, okay? Talk about competition for a minute. We gotta always talk about competition, right? If you think about Dropbox, they have two beast companies they're competing with, and one, direct smaller company they're competing with, right? The direct smaller competitor they have is Box, okay? But then they have the two beasts they're competing with, right? Microsoft and Google, okay? Those are two beast companies that you usually don't want to compete with. However, remember, okay, when it comes to Microsoft and when it comes to Google, like, how big do you think this opportunity is for those companies? Obviously, if you're looking at a scale of what these companies do, where their revenues come from, where their profits will come from, things like that, this is a much smaller space. Remember, Dropbox is a company that has a valuation on it of about $8 billion, okay? So this is a I don't want to even call it a secondary focus for Microsoft and Google. It might be the fourth focus or the fifth focus or the seventh focus, because these companies have businesses that are way more enormous, that are way more impactful to their numbers and where the companies are going long term, okay? So yeah, they absolutely are competing against some beast companies, but remember, those companies aren't fully focused on this, opportunity, whereas Dropbox is fully 100% focused on this, and they're going to try to do everything possible to make sure this company not just succeeds this year and next year, but for the next 5, 10+ years into the future, okay? Financial highlights. This company went from 2017, $1.1 billion in revenue, to 2019, $1.6 billion in revenue, over $1.6 billion in revenue. So this is a company that's growing despite the major competition from Microsoft, Google, and others, okay? Operating income-wise, it took a whole level up over the last few years, okay? 2017, $60 million operating income. Last year, up to $170 million. In 2019, over $200 million. But even more exciting is when I look at operating income for the most recent quarter. Look at the most recent quarter, 2Q 2019 to 2Q 2020, right? From $40 million to $96 million. Massive difference, okay? Revenue, the left-hand chart there, also a big increase, okay? From $402 million in 2Q 2019 to $467 million this past quarter, okay? Very nice. But what I love the most about this company, okay, is long-term targets for this company. It's a company that had a little under $400 million in annual free cash flow last year. They're targeting $1 billion+ within 5 years. And I look at that, I say this is the type of company that has some major growth in front of them if they can put up that type of number, okay? We're talking about significant when it comes to Dropbox, okay? Also, look at the current year. Current year, they're expected to grow 14.4% revenue growth. Don't be surprised if they, post a number better than that. Let's just put it that way, okay? And also, next year, they're expected to grow double digits again at about 11%. I think they'll grow faster than 11% next year as well, okay? I think they'll outperform both those. I think this company has 10% revenue growth plus expected for this company for as far as I can see. I don't think it's slowing down anytime soon. I think this will be a 10% plus revenue growth beast for at least the next 5 years, if not for this entire decade. Because remember, Dropbox will continue to attract more and more users. They'll continue to probably go up on price every once in a while, right? They'll continue to build out something like HelloSign. They'll continue to improve their product, make it better, and they'll probably acquire some companies along the way that will help revenue as well. So, when you put all those things together, probably a long runway for growth, okay? The balance sheet, as far as the balance sheet goes, They got a lot of cash laying around. So think about this. It's a company that only is a, $8 or $9 billion market cap. They have $1.1 billion in cash sitting around. It's a company in short-term investments. This is definitely a company that's in a position that if they want to acquire, some more of a startup company, one of those companies that's growing like crazy, that has 50, 100 employees right now, and get in early days, that's maybe a game changer. They can absolutely make a move and integrate something like that in the enterprise software they're using. And when it comes to Dropbox, a smart workspace, all those sorts of things. So very, very excited about that balance sheet. If we look at the forward PE, it's almost startlingly low for this company. A 26 forward PE on Dropbox. That's just too dang low, okay? It's a company that should, like I said, I expect this company to grow 10% plus revenues for at least the next 5 years, if not the next 10 years, the rest of this decade, okay? And when you think about a 26 forward PE, way too low, okay? Way too low. I think this company has massive growth in front of it when it comes to revenue, when it comes to net income, and when it comes to where this valuation needs to be over the next several years. And all those reasons make me very excited on why this could be easily a stock that could double my money, if not more than double my money, over the next 5 years. Needless to say, okay? So I absolutely love Dropbox. I could definitely see myself buying another $50,000 worth to $100,000 worth in the month of September, especially if it remains anywhere close to this price it is currently, which is around $21 a share. It's not a stock I'm planning on, being done buying anytime soon. And honestly, even if it went to 25 to 30, I would still probably continue to buy it. If it goes over 30, that's probably when I would pull back and say, okay, now I'll just let whatever I have, I'll just hold it if it goes over 30. But until it gets there, I'm definitely very interested in continuing to add shares across my accounts of this particular stock, which keep in mind, I only own the stock in 2 accounts right now. So I could definitely add more shares in those accounts and to other accounts as well, okay? That was the first stock up of the 3. Stock number 2 of the bunch is a company named Upwork. Ticker symbol on this one is UPWK, okay? Upwork, this is a stock that's $15 a share. This is obviously a freelancing economy, let's call it that, freelancing economy type company, okay? Main player in this market. So think about it. I mean, imagine you have a business. Imagine it's just a small business, okay? Just you and yourself and I, okay? That's who's operating that business. And you need a little project done, and you could go on Upwork.com, type in the type of job title you're looking for and what type of job you're looking to get done. You're going to get a massive list of folks come back to you. You're going to see into detail exactly what these folks have done in the past, what their skills are, how much they're looking for, and all those sorts of things. And you can actually talk with them and hire them directly all through. The transaction can go through everything on Upwork. Super simple, okay? And by the way, it's not just small businesses that are doing this. It's also mid-sized businesses and even enterprise. If you need some freelance work, Upwork is a place to do it, okay? Market capitalization on Upwork is $1.8 billion. In the stock market, $1.8 billion is not a big company, okay? And when I think about this company's long-term opportunity, if we're thinking about the 2020 through 2030 opportunity with this company, this is one of those companies that, I definitely could see having that $10 billion plus opportunity. As long as this company continues to execute, the market they're going after is so massive that looking at it at a $1.8 billion market cap could really be kind of hilarious if we look at this in 5 to 10 years from now, because of how big the market opportunity is for a company like Upwork, okay? Now, there's another company that I just started buying very recently. I have 825 shares in one of my accounts and another 815 shares in another account. So position I started adding very recently, and yeah, I definitely want to buy more of this one. When it comes to Upwork's mission, their mission is to create economic opportunities so people have better lives, and their vision is to be the #1 flexible talent solution in the world, okay? Otherwise known as the freelance economy. #1 flexible talent solution in the world. This is a massive opportunity this company's going after, okay? If we look at revenue increased 19% from 2018 to 2019, and it's holding very steady even in the most recent quarter over quarter, okay? 19% revenue growth from Q2 of 2019 through Q2 of 2020. And that's despite the whole Rona situation, slowing down a lot of small businesses and mid-sized businesses in a massive way. And a lot of those folks that maybe needed some freelance work before, maybe not needing it as much, and they still posted 19% revenue growth. Like, that's a very impressive number, okay? But EBITDA is really increasing rapidly for this company now because it's starting to really scale, okay? If you look at 2018, $3.8 million in EBITDA, $7.4 million in 2019, which means essentially this company just doubled up their EBITDA roughly year over year. Huge, okay? Now, in the most recent quarter over quarter, obviously EBITDA looks messy. Yeah, it's a Roni affected quarter. That happened to a ton of companies out there. Very short-term thing. EBITDA will get back rolling in the right way very soon, okay? And when you think about Upwork, it's a massive thing for especially small businesses and mid-sized businesses, but even big businesses, okay? Because the average time to hire is usually about a month versus Upwork, it's like 3 days, okay? And if you think about it, I mean, imagine you're a local business, a small business, and it's not something where people have to physically be there for, right? I mean, imagine you're trying to look around your town or your city and trying to find the right worker. All of a sudden you can go on Upwork and all of a sudden the whole world is your possibility. You can hire a person in a whole other country that might honestly be way cheaper and it might end up doing a way better job than that, local Joe down the street or something like that who really doesn't know what they're doing, and you might end up having to pay them way more and those sorts of things, okay? And also, there's meaningful cost savings that go along with this, especially if it's for any tasks that you don't need full-time workers for, right? Not every job you need in a company, you need a full-time worker for. Sometimes there's some things you got a project that needs to be done over the next week or the next month or even the next 6 months, and you really don't need to or want to hire out a full-time employee. You just need a freelance worker to get that job done. And also, not all the people in the world want to be employed by a company. A lot of people want to be their own boss at their own schedule. So if you're a high-skilled professional or a skilled professional in any sense, right? You can go on Upwork, schedule exactly when you want to work and those sorts of things, and you could do a big project for a company over 3 months and then take the next 3 months off if you want, right? And so that's kind of the beauty in that business model. It can really benefit in a huge way to the freelancers and the people that are looking to hire freelancers in a massive way, okay? And the market they are going after is enormous, okay? $560 billion is a global remote work opportunity. By 2025, online talent platforms could add $2.7 trillion to global GDP, according to McKinsey, okay? I mean, at the end of the day, when you look at these type of numbers, it's just a big opportunity Upwork's going after. And it's such an advantage as a freelancer to basically put exactly what you're looking for money-wise for a job, exactly your work history, your skills, those sorts of things. And if you're on the hiring side, to be able to see exactly what this person has done, their work history, their ratings, their reviews, their availability, the compensation they're looking for, everything across the board. It just makes the process so seamless. You can get the whole transaction done right in Upwork like a piece of cake, okay? And when it comes to Upwork, they have a lot of different product offerings. They have their basic, which is essentially they'll just take fees, okay? They'll take a 3% of the freelancer billing to client, okay? That's a 3%, let's call it client fee. And then there's a freelancer fee of basically 20% for the first $500, 10% for the next $9,500, and 5% for any amount over $10,000, okay? And then they have a plus plan, they have a business plan, and they even have an enterprise plan, which is a little more customized, that they can customize for you and those sorts of things. So a lot of different product offerings, all the way from the person that has a small business, they're just looking for somebody to hire one time, all the way to the big, huge corporation that's looking to hire, freelancers all the time for various projects. The company has 3 core growth opportunities in the short term, okay? Attracting more clients and bigger clients, enabling more spend per client, and also making more high quality matches. So, if you want to look for somebody, you have that perfect person right at the top for you. You do that by algorithms AI, okay? Now, in terms of the executive team, a lot of bright thinkers on the executive team. Obviously, as an investor, I'm always looking to the president and CEO, and obviously Hayden Brown is that person, and I really like her. I think she's got her head on straight. I think she's the right person to lead this company. She's been with the company for 8 years now. I think she's, done a decent job since she took over. I think she'll do a lot better job in the future as she gets more and more comfortable in this role, and I think this company will build out to a very large corporation over time under her leadership, okay? Balance sheet wise, phenomenal. You guys know I love a good balance sheet, and absolutely Upwork has a good balance sheet. $146 million in cash and cash equivalents and short-term investments versus only $7 million, actually less than $7 million in long-term debt. That is a thing of beauty, okay? No, when it comes to Upwork, the main downside, I mean, obviously they have competition, Fiverr and a few other competitors. If I think about the long-term competition, I think Fiverr and Upwork will constantly be those companies that really fight, but man, this is such a big market opportunity. They'll both have plenty to go after. But the other main negative, I guess you can say, other than competition, which every company has competition, is the forward P. They have no forward P on this company, which is saying, Wall Street basically saying they don't expect this company to be profitable over the next year. In my opinion, in 2021, this will be a profitable company. I believe so. I really do. I think this will be a profitable company in 2021. When I look at how the business is scaling, when I look at where their revenues are going, their gross margin, those sorts of things over the next year or so, as well as this whole Rona situation, and I think how this is just going to make more and more companies think about outsourcing talent, as well as, hiring remote workers, because it's like all these companies that felt like everybody had to be in this little office space, right? All these companies are figuring out they can have remote workers. And oh my gosh, Upwork is in a perfect position to capitalize on that long-term opportunity of these corporations waking up and saying, remote workers, we can have these. This can work. This can work for a business model. And that's a massive plus for Upwork. So I absolutely think the company can be profitable as soon as this upcoming year. We'll see. That's nothing the company's promised. It's just something when I run the numbers, I'm looking at this company and I say, I think they're actually going to make a profit on the bottom line next year, okay? Upwork, love Upwork. I could easily buy another $25,000 to $50,000 of the stock, maybe more. We'll see. We'll see what happens. A lot of it depends on the share price. I got to say under $15 or around $15 or under, that's ideal for me in relation to buying the stock. I can't say easy money because I can only throw that around for companies like the FB and Apple and Berkshire, right? But man, like I said, I can't call it easy money, but I think this is going to be a very profitable investment for me as long as I'm buying shares anywhere around $15 or under. I mean, I'm willing to pay all the way up to $20, maybe even $22 a share for this company. But yeah, 15 and below, that's where I'm like rubbing my hands and I'm like, I think I'm going to make a few dollars in the stock over time, okay? Now, for stock number 3, there's actually 4 different stocks, okay? These are 4 maybe stocks. So these 4 stocks are all stocks that I will probably buy in the month of September, okay? I'm not going to go super in depth on these companies. I'm just going to tell you, very base fundamentals around these 4. But those 2 are kind of the main companies I'm focused on buying. Upwork and Dropbox. But these other 4s are definitely high potential value adds. Some of these are value plays, growth plays, dividend plays, everything across the board, but these are maybes. These aren't for sure. So the first one of the 4 up here that is a maybe is ticker symbol WBA, which is Walgreens Boots Alliance. This one is a bit of a value / turnaround play with a dividend stock all mixed into one, okay? That's the way I really look at Walgreens. Walgreens is a company that has a forward P on it right now of 7, okay? If you don't know Walgreens, it's a pharmacy, okay? Massive pharmacy chain. They own, obviously, international locations, but their main bulk of their business is made up of U.S. pharmacies, okay? Once again, a 7 forward P. This company's doing a ton of cost-cutting measures over the remainder of this year and some that will even probably go into 2021, which makes this company ultra profitable, and it's a type of stock that is just not respected in the stock market right now. Let's be honest. The focus on this stock market right now is for growth companies, growth stocks, and at Walgreens Boots Alliance, a pharmacy chain, it's just not it's just not the right stock for this type of market right now, which is why the stock has been beaten down so heavily, in my opinion, as well as it's, a turnaround candidate. This is a company that should do about $4.69 of EPS in this year, which should be a quote-unquote bad year. That's what everybody's expecting. This is a bad year for Walgreens, and they should still do $4.69 of EPS. And then next year, the company should be doing $5.21 of EPS. I think that's very doable for this company, $5 plus, okay? Revenue-wise, 1.7% revenue growth expected in the current year, 2.9% next year. Once again, those aren't the type of numbers that gets everybody excited in this market. People want 30% plus revenue growth, okay? Which is why Walgreens has completely gone off the radar. But this is a stock that yields almost 5% right now, okay? Stock that almost yields 5%, that is pretty dang close to its 52-week low. It's a $38 stock here today, right? 52-week range is anywhere from $36.65 to $64.50, right? So it's flirting with its 52-week low, essentially. It's a 5% yielder, very profitable business model, turning around the company, which I think will continue to turn around in 2021. And so as I look at this one, I say, I gotta buy this one. This is a perfect type of dividend stock from me. I think I'll get a capital appreciation in the valuation over the next 5 years from where this company's at now, and I think I'm going to make a heck of a lot of dividend money and dividend cash flows over the next 5 years that I'll go ahead and be able to plow into other stocks I like out there, whether it's more dividend stocks, value stocks, or hey, maybe some growth stocks, maybe some growth valuations start coming down to the back half of this year, maybe in 2021. And guess what? That Walgreens position, maybe people will appreciate it a little more in their profitability and those sorts of things. Okay, the market, sometimes it's growth stocks that are hot, sometimes it's dividend stocks, sometimes it's value stocks. It moves around. Okay, stock number 2 of 4 that is a maybe is ticker symbol PLNHF, otherwise known as Planet 13 Holdings. Okay, it's a stock that right now is $3.51. It's under a $500 million market cap right now. Obviously it's a very small company compared to most companies I buy out there. I'm looking for this one anything under $3. I can make an argument that I should be buying it even if it's under $4. Why? Because I think this company will ultimately be a $10 plus stock 5 years from now. And if I think it's going to be a $10 plus stock 5 years from now, if it's $3.50, still a pretty dang good deal, right? So, I should honestly be buying it. A little bit of my pride probably gets in my way a little bit when it comes to a hot stock like this. But under $3 is absolutely where I'm looking for this stock. And, does it go down there? I doubt it. If it does, I'll gladly be buying. And I already own the stock in 4 different accounts. I have 10,000 shares. I think this one's a public account. I have 10,000 shares there. In my main private account, I own 33,000 shares in that one, right? Another random account, I have 6,400 shares. And then in my retirement account, I have 4,500 shares. But hey, man, I'm absolutely interested in buying more of this stock, especially if it, has any type of major dip, which, to get it to have a major dip, you need a massive sell-off. And I got to say, the earnings just came out a few hours ago, and the July and August numbers were unreal. Okay, I might do a video tomorrow or the next day. I might do a video within the next 48 hours on Planet 13, by the way. But those July and August numbers were crazy good. Needless to say that they ended up posting. So yeah, I might end up doing a video on that one. And yeah, any weakness, I should be buying that stock as well. Okay, stock number 3 of 4 that is a maybe for the month of September when it comes to me buying is Foot Locker. Ticker symbol, this one is FL. Foot Locker, you guys know Foot Locker, they sell shoes, okay? So where you go if you want to get some nice shoes, okay? And they own a bunch of different companies in relation to the shoe wear category. That's a very simple one. It's $30 stock, market cap of $3 billion, PE ratio of 16.5 right now. As this business gets back to major profitability in 2021, I mean, if the stock's still at $30, that would mean the PE will probably go to somewhere around a 6 to 7 range, which is just ridiculously low, way too low on this particular stock. This is a company that has a 2% dividend yield, which they already brought the dividend back, by the way, but yeah, it yields about 2% as of right now. It's obviously, closer to its 52-week low than its 52-week high, but that really doesn't have, that much to do with me. I'm just looking at this company and I'm like, dude, this company's already posting amazing earnings. They already had to reinstate the dividend because the earnings were so dang strong. They earned $45 million on the bottom line. 43 cents a share versus 55 cents a share a year ago. And there's some of their stores were closed for the entire quarter, and some of their stores were partially closed for part of the quarter. And they still reported that type of earnings. That's unreal. Absolutely unreal from this company. Once again, I can't call this an easy money stock, but is Foot Locker a lot higher than $30? 4 or 5 years from now, I think it'll be a lot higher. And yeah, I think they're going to continue to up that dividend each and every year for the next several years out. So I am super excited about Foot Locker stock as basically a valuation play and a dividend play, okay? And when it comes to stock number 4, I can't leak this one quite yet, okay? I can't leak it quite yet because I'm still honestly researching this one. I'm done about 90% of the work, but this is a growth stock. I am super excited about it. But I can't let it out yet, okay? But the good news is I might make a video for you guys in the next week or 2 on the stock, especially once I fully get done looking into it, if it's actually a stock I'm interested in buying and those sorts of things. I barely let out the name in the Discord chat within the past 24 hours. I barely let the name out in there, okay, in the breadcrumbs tab. And it's kind of sketch that this stock already went up 3% here today, and now it's up another 5% after hours. I barely leaked the name in there. I didn't even tell anybody that's for sure I'm buying it. All I said is I'm looking into this company, and it's already moving up huge, which means I think there's people leaking information out of the private group, needless to say, because for it to already be moving up like that is pretty weird. There's absolutely zero news in relation to this company that has come out in the past 24 hours since I leaked the information. I was even looking into that. But you know, if I like it and it ends up being a stock I'm interested in buying, I'll do a video for you guys and cover it. But as of yet, I haven't even bought the stock, and you know, I still have more work to do there. Okay. Alrighty, guys. I hope you enjoyed today's video. As always, if you don't mind smashing that thumbs up, remember our goal is to get to over 5,442 thumbs up. I think we can beat it, and you know, obviously we'll do another one of these videos in October. All right. And if you're looking to scale your stock market portfolio to 6 figures, 7 figures, 8 figures plus, check out the first link in the description down there. Go ahead and apply, and hopefully you'll be able to get on a phone call with somebody high up from my team, be able to talk to you about Financial Fortress, a product that has helped so many people get to 6 figures, 7 figures, and beyond. First link down there. Thank you for watching, and have a great day.